Good morning and welcome to the Breakfast Club. Here we are on Friday, October 13th. Friday the 13th, 2023. And we're going to be looking at the markets today, starting off with the British pound. There's a little bit of pre-market analysis before the opening in the next 13 minutes in New York. Well, it looks like British pound came all the way back down to where we're calling for yesterday. Yesterday we're calling for the market to continue down, and this was potentially the place that we're going to find some support. And it looks like we stopped dead right on the place where we're looking for support. And now we're looking to see if we get some support off of this and drive back up, or are we going to drive through into the daily fair value gap and work our way back into the midpoint and eventually the bottom half of this. Again, there's some equal lows down here on the daily, and we're going to start pushing for lower time frame or higher time frame daily fair value gaps for a fill. Like this could be the next price leg down. This could be quite a plummet for the British pound if this price leg is any indication of where it wants to go. So let's look at just the short term right now. We're looking for, is there going to be support off of here? Are we going to run back into this area here, or are we looking for this to eventually turn into a fair value gap and I'll start to get below this little swing here? This candle is actually lower than this one. So if we do get below here, we're looking for a breaker inside of a fair value gap, return back up in there, and will we continue down? Or are we just inside this breaker right now, this 2-day candle here, last down close candle for run above old highs? You add these two together and we're pretty much banging off of that right now. So are we going to continue back up again, having found support off the fair value gap on the daily? Let's wait and see. Short term, we're looking for a measure of support here. Opposite, see how what happened here is that we went all the way through the fair value gap into the midpoint on the euro. Now are we going to continue to eat through the fair value gap to the bottom half? We wanted to see it stop right there, get some level of support and continue on the upside, but alas, it's not meant to be. This is the sixth sister of the two, and we've got a much deeper run into the daily fair value gap here. We've come back up, hit the high of the fair value gap, creating a potential new fair value gap on the daily here inside of all those new week opening blocks or new week opening gaps. So my thoughts are that there's more downside in the euro and there's potentially more downside in the pound. I feel like this is heavier than it is bullish. That's just as Michael says, gun to my head. I would go with this now providing a level of support, and we're going to continue back down inside this daily fair value gap on the euro. So I'm looking for more downside on that, just because we came back up, found support at the top of that fair value gap. We actually went into it, came back up. You expect to see a big drive through that. It hit resistance on the top, and now we're back into the fair value gap again on the daily. Here we are on the CAD, the Canadian dollar, good old Canadian dollar. Yesterday we were calling for this run up, and we got the run up. We got the run through the fair value gaps here. So as we're coming back up here, I drew this box out to show you the other daily fair value gap that had formed, and what we wanted to see is it to drive through that, come back and find a measure of support either on top of this box or on top of the daily fair value gap here. And it looks like we found support on the top of this one, and we're going to continue to push up for higher prices. Now we're going to push up into this order block. We've already hit the body of it, so now we want to start seeing the threshold give way, rejection block, and then the levels in the wicks for higher prices and a run above this old high here. But for today, if we continue to keep this level of support, look for a run above here, here, here. So those are like 3 short-term objectives for the daily. If this turns into a bull candle, so start looking for a scale out at your body of the candle here. That's just slightly above that high. So go for the body, the threshold, rejection block. You may just get this run up to the rejection block and then peel away. We have a high resistance liquidity run. This is more high resistance when this wick's above this one. So we may just get up to the threshold and then turn around and pull off of that and come back down again. So you make sure I would make sure you scale out at this candle's open, its threshold, its mean threshold, the rejection block, portion up here, take the high. So you'll have, if you did 10, 20, 30, 40, 50% is off at the top of that high. That's quite a sizable return. And then a continuation for higher prices. We're looking for this high over here. Here, there's a small imbalance sitting right in here. So you're looking for it to run back up into that, which is the mean threshold of this breaker here. Yeah, so stop loss would have to go below here. You want to make sure that this threshold, or sorry, this inversion fair value gap now that we've come back to it, we may find support. We want to see the support maintained here, at worst here, and stop losses here. You don't want to see it come all the way back through all that stuff again. You want to see this kind of used as a breakaway gap, or a island reversal, as it were, the old style island reversal, when you have a few candles in between these two fair value gaps. This one has to finish in order for that to fully form, but we'll see how this support is maintained off of this fair value gap here on the daily. Today, look for more high prices though. Look for a drive up into the order block I'd mentioned earlier. Natural gas is still finding support on top of that fair value gap on the weekly. We went through it, we come back up. Now, does it provide a level of support in terms of an inversion? Well, it did here. It came back up inside it, hit it perfectly off the top, and then provided a level of support, and we continued on the downside. Now we've drove up and through it here. We popped through it. Now we're sitting on top of it. That's what I want to see, and I want to see it just slowly start to creep away from that and then start to work up into this higher time frame. We want to see this stay open, that would become the breakaway gap. Though I did talk about this earlier, saying we could get all the way back to this again, which is a sizable drop back down before it runs back up. I want to see that stay open though. I want to see this week used as the fair value gap that creates the breakaway for run up to higher prices. So we may see another week of coming back down onto this or into this. If today closes and we don't get much more movement, and then the next week opens and we run down and just tag the edge of it one more time and start to push away, we're looking for higher prices into the following week, up into the $4 range. And that's where you want to see push through into this gap here. That's what I'm looking for natural gas. Australian dollar. Now that drove all the way through. We were looking for, is it going to provide a level of support at these levels? It didn't. It drove straight through them all. And now we've got, again, a continuation on the downside. So a lot of chop going on. Australian dollar is weaker. But look at the New Zealand dollar here. It drove all the way through its as well, but it still hasn't taken out the low that occurred back in August. Again, compare the two. Here's the August low. We have a lower low, and now we're driving down into a new rejection block and possibly more lower lows. See the difference? Here's the August low. It was a higher high, higher high, higher high, and we even blew up into another higher high, taking out all the liquidity on the upside, and then quickly reversed. Now all of this liquidity was taken out here. Now we still have a pool of liquidity down here, so if we do finally take out that August low now, where's a reasonable place to reach for? We're still inside. We'd be inside this weekly inversion fair value gap. So if I draw that there, that becomes the inversion fair value gap. We could come back into the midpoint of that. That would be just enough to run out the lows. So look for price potentially to run into here. 58.50 inside that range. To run those and then start to drive back up. Who knows? This could be another price leg for further down prices. Can't really call this one right now. On the weekly, I can't call it because it's just too tight. On the daily, yeah, it's already hit the rejection block. We're into the wick already. So I'm expecting more downside here. We found some support off of this daily fair value gap. We went up through it, came back, fully filled it, ran away from it, cleared these highs out, came all the way back to the very bottom of it. The bodies of the candles respect that, and we continued breaking down. So look for these lows to get taken out now on the New Zealand dollar. We're about to start our new day, opening up in New York. Right there, that's the open. Looking for upside. This is the S&P 500. Yeah, looking for upside. Holy smokes, there you go. Now, where? You said. You spoke too quickly, Darren. All right, well, here we go. Look for here. Look for a close of this price action here. Call that too quickly. There you go. Now, do we get a measure of support right here at this price? A fill of this fair value gap on the hourly. And then do we get a reversal? A run back down into this old high here. These are little inversion fair value gaps that are providing a level of support here. And now we want to come through them down to find a level of support on top. See how we hit the bottom of it? Or the top of it opened up. Now we're running through it. We're going to run through this guy as well, which is also inside this larger SIBI. I like to cut through the candles and look at these as measures of footholds. Let me see. Are we live? Yes, we are. Okay, I'm just double checking, making sure that we got our channel going. We do. So look for some more upside here. Today. $10 we'll see if we hit this at 10 o'clock. I like the idea of running this out at 10. And if we do get that, then I'm looking for this. Potentially there. So look at those two levels for the upside. This will be like the last. If we eat through that, want to see this with a wick to here, not a body, but a wick to here, turn around and then continue down on the downside. So if we do get a wick through this point here, that's the point I want to see at the most, which is like a half of that wick, or sorry, not half, but 25% of that wick, which should show weakness to pull away. So that's what I'm calling the next hour or so, or hopefully next 35 minutes. We'll see how that pans out. And let's look at oil. Look at oil. What a beautiful day yesterday oil had. Nice little run up the whole day. This was I want you to see this. I want you to see how amazing this setup is. If you catch it right, we weren't here in the afternoon, but here's the fair value gap right there on the hourly. We broke above it and through it, and then we created a new fair value gap above it right there. So the play is, do you find support at the top of this one? You buy in here for a long, here for a long, here for long. Those are your three potential entries. Again, I take 3 potential entries to a maximum of 1% of your account. You want to find that at this fair value gap, it provides a level of support as an inversion fair value gap right here, and this one being your first entry into top, middle, and bottom. You want to see it stay open in order for it to run up above these old highs here. So here's what happens. Look right here. The low of this candle here is 82,241. And then this candle here comes down to 82,258. That one tags this candle's low. So this one's low is 82,272, 82,258. So this one dropped just into that fair value gap there. And then we slowly left from here. This one here is 82,285. So that was the opportunity right there to get in on that fair value gap there. Stop loss would go below this low right here if you're keeping it tight. So you're looking at these fair value gaps to provide a level of support. If you're wrong and it comes down, you're tight, your stop loss is small, and you're depending on your leverage and your minimal losses. But if you're right and this does hold price, you just took a huge run. So you'd scale out of first portion 10, 20, which is halfway through that, 30, top of this order block, 40, 50, 60, high 70, and then you're just looking for let the rest run. 80, 90. As soon as you hit the next high, like there's so many different places and different ways you can scale that out. But that would be a huge run for you from yesterday. You would have had so much precision. You would have had like less than a few cents drawdown all the way to your first. If you have used that high as your first objective, that's 165 pips. Then you've got 276 pips, 315 pips. They're just huge. Good morning. Trading day or sideways with the news at 10. Yeah, we're going to wait for the news at 10 because there's a couple of things that... Good morning, Kevin. There's a couple of things that could be going on with the 10 o'clock. I see some nice little potential runs to liquidity, especially in the S&P 500. I don't know when you popped in, but on my little pre-market analysis here, I just finished back here. I'm looking for these points up here around 10 o'clock. If we do get a reaction off of an old high, close of a fair value gap, a wick up in 25% of this would be the worst case scenario for me, as long as the body stays below this, and then we get a turnaround, look for that silver bullet set up for a short. Just finishing off my pre-market stuff here. So now we're looking for see if this order block here, this breaker, holds price. So you want to look right here. Does this hold price? And we start continuing further on the upside with oil. So look for that breaker to hold price. Gold. Boy, did gold ever turn on a dime here. It's amazing what happens when there's a war going on. Everybody runs to areas of safety, a safe haven, which is your precious metals. And here was a great example. So this was the day we opened up with the Hamas-Israel war, and you can see a lot of people bailing into the gold market, buying it up, buying it at a really good discount right on a monthly fair value gap high. There's the monthly fair value gap high. We went through this one right to the top. We were thinking a continuation on the downside, which probably would consider had the war not begun, we probably would have seen more continuation on the downside. So we can get rid of this now. We have eaten through this fair value gap here. We've eaten through this fair value gap and this fair value gap. We actually gapped above those. We found support inside this guy right here. We went through it with a body, came back, found support at it, body one more time, found support at it, and we started to push away into the fair value gap on the monthly. We ran through, started off near the bottom, and we drove all the way through this fair value gap today and all the way through this one. So now are these going to provide levels of support that we can climb up on top of to continue up to higher prices on gold in the long run? The ETF I was looking to buy, if had it come all the way down to here, then I probably would have got in a real good price in this ETF. It's probably taken off right now. GLCC was the ETF here in Canada. It was paying some pretty good dividends. Now it's going to pay the really good dividends and principal. So, yeah, that's gold. So gold got away, which is fine. I like to see some liquidity coming into the market. So on gold today, because it's Friday, we've already done a huge retracement back into this range. Are we going to turn around and can start driving back down again, or is this war going to continue to influence? Everybody's worried about, because they've now called this a jihad type of holy war. Everybody around the world support them, so everybody's kind of a little nervous about how Jewish people are going to be affected by this around the world. The jihad, the holy war. I venture to understand the complexities of it. I was kind of studying it yesterday, looking at it on YouTube and looking for all the different people with not really kind of non-biased, trying to give a neutral opinion about where this all began. And oh my goodness, it's a very, very complex issue for sure. It's not as simple as I was here first, this is mine. But anyway, it affects the market in a big way, and we now have this pull into gold, this movement into gold. Now, I think if we end up staying on top of this fair value gap here, if we get on top of the daily and find a measure of support, if this monthly holds price and we continue pushing up, then I think we could consider this the break. So if I get above these equal highs with the body of the candle and we start pushing up, then I can say, you could probably safely say that that'll be the low for short term, at least the short term, until the end of the year. Then look for higher prices in gold to reach up into this $2,000 mark. If we do provide support, now let's try arguing this the opposite direction. If we do find that gold has just hit this order block right here perfectly, hit the price, filled in that little tiny fair value gap that was right there, it ran all the way up, balanced the price in here, and now it's looking to retrace. So now are we going to find the wick did the damage, and now we're going to really start to get a big pull back here, and this was just a run up to gather up liquidity to continue on the downside. I'm not sure where to call this right now. Obviously looks more bullish for me, where I want to find a level of support here. I'd like to see that stay open now, provide another measuring gap, and then start pushing for further upside. Tech on the NASDAQ daily. We're working in that new week opening gap. We're banging around on there. We're inside this daily fair value gap. Let me extend this to the end here, because it looks like we're going to still be using it for a while. So you see how it came up? Now people say, why would you cut through all the candles? This thing is long gone. You can't just form fit this. Well, you can, and it's not trying to form fit it. It's trying to show you a level of support that are found inside these fair value gaps. And yes, you can cut through candles. We cut through candle here all the way back into August of this year, August 28th. Though the day of August 28th, there's that whole fair value gap that formed in there, and we're just we went through it, we came back up into it again, and now we found support. Look at that on both sides of it. Its high and low are the highs and lows. A little tiny mohawk there. All the way down to 15.1002, which is what we called for yesterday. It hit it, came down, hit it again today, and now we're right in the middle of the range. We're literally in the middle of this fair value gap again. So now we're working this. We got to say, now where do you go from a 50% higher or lower? It looks bullish, for sure, but that could have been the resistance that we needed just to fill that little fair value gap, and now we continue down on the downside. So on the daily, I can't give you a solid read. We do have a little inversion or a little fair value gap down in here on the daily to see if prices will continue pushing down. So let's take this guy right here. I'm going to make this a little smaller. It's starting to get a little noisy in here. high, low, fair value gap, came back in, filled it, hit it, inside of it, and left. Right at the bottom of this other one. So these are overlapping fair value gaps now. We got one here. Which one do you take? Well, just look at them as areas of sensitivity and look for if this is the high to low, right here, this swing for that high to that, sorry, that high there to this low, and you pull that swing back and say what lines up with 50%, 62% of a retracement back into this range. If this was the high and that was filled and we're looking for a run back in here, what would be a logical level for this to return to? This is how I kind of look at it. So it will be a logical level. What's around 50%? Well, look at that. We have one sitting right on the top of the monthly fair value gap right here. Higher time frame, right on 50%. So if this is the high, now that we've got below this low here, I want to see the body get below this low. Find a measure of support here, get underneath these little fair value gaps, find a little measure of support, and continue pushing down for lower prices. So where this ends up today, it may just stay inside that. If we look at the Friday, Thursday, Wednesday, Tuesday, Monday, this whole range, if it pulls back into 30% of that range from the top, or the 70%, so you get 30% retracement, that could be the end of the week. So I've kind of given you both sides of that one, not quite sure where to go. We're sitting at 50%, so I can't give you up or down. My bias more would be to more the downside, for either sit here and then open next week and start coming back down into this range again, gather up some more orders and drive up for equal liquidity above the market, and eventually these equal highs, or sorry, these this price imbalance above the markets. That's where I'm looking at with tech. What are you looking at today, Kevin, my friend? Well, that's my little pre-market analysis. It took half an hour for all that lot. So where am I biased today? Where's my play? So far, I don't have I like this pop top here. This little pop top. Hit the top of that. Now, what's going to happen in 10 minutes? What kind of juicy nugget have we got here? Look there, it came all the way back down into the top of that weekly fair value gap. Or no, so that was the monthly again. Hit the top of the monthly. Are we going to get a level of support there that's not going to stay open? 84.41. 84.41. Thinking news in a few minutes is going to move. Yeah, I agree. Look at this play, man. We're looking for this to come back down into, close that gap. Came down, closed the gap right back to the week's previous close, last week's previous close. Look at that. Hit right off of the, and hit right off of the monthly. Or is that this? That's that a weekly? I think that's monthly. Let me have a look. Yeah. Nope, it was the weekly. It was a weekly. Weekly and daily. Came back, hit that. clean that up. Then this is what we were talking about, fair value gap. Drove through it with a body. Created a new fair value gap here. So this was the pivot one for these two. Then we came back into this one. That would have been your long right there. Stop loss goes below this low here. Because if you're wrong, we want to see this stay open. If you're wrong and it comes back and fills it, then you're wrong. Your stop loss was pretty tight. And if you're right, you would have caught a huge run, a $4 run. No, $3 run. That's 300 pips for these equal highs in that here. Massive. It's still above the London and Asian session highs. London and Asian session highs. Oh yeah, this is the London Asian session. For gas. There, we finally hit that objective there. We're 7 minutes away from our 10 o'clock run. Now, so that objective has been hit. So when we're talking about that back here, that's, I don't know how many we're talking about right below that one there. So there's at least six or seven handles right there. I want to see how react off that now. And you start looking for an opportunity. We break this low with a fair value gap forming in here. That would be a break in market structure to the downside with an upside objective already hit. So keep that in mind. This could be our play here. And I'm going to go light. I've done really well this week on this account, so I'm cutting this down to one lot now. I harvested some good pips the other day. It took me a lot of drawdown. I'm not even going to show you the trade. It was not a good trade at all. There was a massive drawdown, but I kept the trade on because I was pretty sure it was going to reach for a spot, and it eventually reached for it, but it was a huge drawdown in order for me to get like a 10K return. That's not something I want to show or even teach. It was just wrestling with the market. So looking for that upside potential wick. That's my line in the sand there. Just keep an eye on the mohawks. Don't really mean a heck of a lot. Keep an eye on the bodies of the candles at that point. We'll see how the bodies respect them on closes. I traded NASDAQ futures. It closed and then shot up to where it is 1,400 loss after I just made a solid trade of 1,200. Oh no. So it's $2,600 swing. And this is tech. You did it in here. What did you get on top of? So you said I traded NASDAQ futures. It closed. I closed it, and it shot up to where it is. 1400. Oh, you were going long, were you? Right there at the bottom. Oh, you closed out down here. You were trying to go long? Yeah, so were you trying to go long on this one, or were you trying to go short? Yeah, I was long on 2 contracts. Oh, you must have been in here, so this drawdown is what got you out. Was your stop loss below here? Yeah, I can see the squeeze. There's your inversion fair value gap there. We come back in. Well, it's not an inversion, it's just coming back to fill. It doesn't fill. Finds the top of, or the midpoint of this daily fair value gap. Yeah, that would have been a place to think, oh, I'm going to go short on that. If I'm just trying to think about where your entry would be, unless you were looking at this one right here. So you look for, there's your inversion fair value gap there, because we went through it, and look at this, we came back, hit it perfectly on the edge there. And now if you had entered in there and went short, you're aiming for the top, the first fair value gap, the fill of this fair value gap here, and then start to unload your positions on the way down through this one. But if you're going long, I don't know where you got in long. What was your entry long? I'm trying to find your logic for your logical entry, and if you were correct, then it just turned against you. That's no big deal. But if we can help learn where you could have were you on the hourly or on the, I went long at 428. I went long at 15.310, and you're probably on a 1 minute or something like that, right? What time frame you're on, just so I can give you a decent analysis of that. Ooh, what a gap. There's the 10 o'clock open, or the 10 o'clock news event. At 428. Five minute. So this looks like it's gonna, if you look at this first push up, then it starts to go down. We're looking for, potentially, the rule is now for this to go higher. This is just a Judas swing. So look right here, this little pocket right here for a little pop down. And then it's going to run back up above here. This is the news event, trading the news event. You wait for the first little indication. So it gapped open down here, went straight up, then it proceeded to run down. So usually it's first indication of where it wants to go. It tips its hat on the first one, then runs down for the Judas swing. People think, oh, it's just running back to balance price and then taking off down. And then it will retrace back up, and it should take out the highs up here. I was trading on the 5 minute, then looking out to the hour and 4 hour drawdowns, just trapped everything in back to higher. Keep your eye on this little area right here. Yeah, you want this shenanigans to kind of settle down now. Give this 12 to 17 minutes. Sorry, I'm trying to look for your trade here. 428? Is that the same thing as mine? Like, what would that be on mine? 1600? 1400? 28. Probably here somewhere, right? You got long there. Let's go in the 5 minute. You tried to go long here. Hmm. 5 minutes got some pockets of liquidity down here. Return to old consolidation down here. Then the pump up. Look for 62%. Look at that. Ting, right off of it. Like precisely on it, which is inside the fair value gap. Did we get a further dip down, or was that all you needed for the quick retracement back into here? If you pull it from the bodies, (62%'s around in here. That little lower looking for in the 1 minute. A lot of chop in here. Ain't crazy how it nailed the bottom. 62%. You say, is that some little random level? Is it some random level? We keep pulling out all this randomness all the time. Not much reaction on gold, you said. Yeah, gold hit that right on that high there. So is gold the play of the day? Dang. So that hit the high. Created a little swing here. Breaker. Equal highs. Fair value gap. Tagged it. Start pulling away. Fill the fair value gap down here. That whole objective would have been scaling out all the way down to here. That if it reverses on you, you're already way out. That would have been a nice little trade right there. Back into that. But now we have opposite breaking structure. Come all the way back into here. This needs to stay open now and a push back up for equal highs back into that area. There's triple highs. They're not going to leave those untouched. So let's put some lipstick on this little piggy here. Look for that little box. Look for that upside area there. You want to see it provide support anywhere inside there would be fine. For a rundown to clear out the liquidity down here. That's all been filled already, so you want to see this start reaching for further downside back into that little consolidation area here. If it was going to start retracing a bit on a Friday. British pound still going down, so so far we're correct on the British pound, assuming we're going to continue going down. From the pre-market analysis, we're looking for further downside on British pound, further downside on the euro. Looking for euros bottom at 49.05. So is there an opportunity to get in here? Gap down, come back up, find support. Fill that fair value, or that liquidity void right to here. US CAD, are we getting support on top of here now? You start pushing up. Daily, don't know. So we're looking for this to provide some level of support. There's another little hourly fair value gap over here, which now becomes inversion. You want to see that provide a level of support here, and then a push back up for higher prices. Natural gas, I'm still looking for this as my objective for the next price leg up. It can come back into that price imbalance for a run back up. Aussie dollar, looking for further downside for these lows. New Zealand dollar, looking for it to finally take out its lows. S&P, staying right off of that little area we talked about. Now you're looking for your setup to happen. We do have a gap, news event, move back into, even though that was a news event, that is your silver bullet. Not that you would have traded the news event. So here's your next one. There. Stop loss goes here. We're going to go with one right there. Look at that. Entered there and it dropped down here. Gotta love the spread. So I'm going to put it just above there because the spread is a bit messy. So I'm looking for some downside here now. So that's the little fair value gap I'm looking for it to provide support on. If I get a body that starts to go through that, I'm out. Oh, I lost my man Kevin. I don't see him on my thing. You still there, Kevin? So as soon as that guy gets below here, I'm going to scale out a portion there. Added more or feeding the wolf? No, I'm not adding more here. I'm just kind of going to feed the wolf right there. Shall I put the wolf in? As soon as I put it in, it'll start taking some it should take a portion off right away as soon as I hit OK. Let's turn those off. I don't want to. Oh yeah, feed the wolf. Ow! Feed the wolf. Wolfie, feed. How come you're not feeding? Oh, it's because it's not turned on. Feeds the wolf. Ow! Feed. Oh, it's not turned on. Oh, wait a second. Stand by. I gotta turn on. Allow trading in the algo. Now feeds the wolf. Ow! There we go. Now we're feeding. Now we're feeding, and my live account's finally making some cash again. I'm going to move my live account to break even. Woof, there, and I'm moving this guy to break even there, and we'll take. Ow! Feed the wolf again. All right, so. We're going to take a portion of that off there too. I don't want to see it get above here. Okay. Yeah, I'm in here watching this play out. Did you take a trade here as well? Yeah, I'm here watching this play out. Nice trade. I didn't go in on. Just looking for another appearance. That's fine. You don't have to jump in on these. You've got your setup that works well for you. I'm going to take another 10% off here. Ow! Go to my live account, take some off here. Oh yeah, that's fine. Yeah, usually I'll do a. The show says it starts at 9:30, but I'll usually start about 10 minutes beforehand just to kind of do a little pre-market analysis. But that's the area we were looking for some stability at, which is we kind of drew that out in the market analysis as well. But we're looking for now you got to start saying, well, what on the higher time frame am I looking to fill here? The rest of this fair value gap. So 43.52. That's my objective there. It's 43.52. So if we get back into here, we get 43.52. I have total confidence in your trading, but it just feels wrong blindly following. Oh man, I love the way you're thinking. Good for you. If it doesn't feel right for you, it doesn't look right for you, it doesn't feel like, yeah, that makes sense to me, don't trade it. Man, you got some level of maturity in you, Kevin, that is, I really respect that, man. I really do. Like, you're not blindly following me just because I got some trades. Like, that's the way you should do it. There's way too many people out there blindly following Michael and not really going. I think that's why he says, don't take the same trades I'm taking. Like, really look at this stuff and see how it really germinates with you, and how the trade sets up. I went through a logical level of how I was going to enter into that. But if that doesn't sit with you, or you didn't hear it, then what you're doing is absolutely fine. Then, man, we will get many, many more trade days like this, many more. So it is definitely no need to rush, for sure. Good for you. I was here for the pre-talk, but once you went into the trade, that's why I heard the meta trade sound, but wasn't sure where you were going in, so I didn't go. Good, perfect. That's exactly the right attitude to have. Now, if it goes above here, I'm out. I just closed out. Is it going to go above there? Yeah, I'm out. That's the rule. All done. Done and dusted. So now we're looking at the setup for long. We didn't quite come down to our, we did fill this little fair value gap down in here. Didn't quite touch the bottom of the daily. But what I want to see now is I want to see a fair value gap form in here. I'm going to turn on the little buy side bot just for entertainment purposes only. I'm going to turn that on and see if she starts going for a long here. If it starts going through here, I'm going to turn the bot off and move to the sidelines for the day. But this is for entertainment purposes. I've done a really good run this week. So we'll let the bot trade in all these trades here. And if it takes me out, which is not a good sign it's doing right now, then I will turn this off, move to the sideline. Yeah, that's not looking good already. I don't know why it keeps flashing in and out like that. Why is it enter trades and it's out of trades? It's like it's closing them out on the way up as well. Oh, it's moving the stop loss up. Oh, Lord. It ran the stop loss up behind it. Why was the stop loss running behind it? That's interesting. Done and dusted. Wolves are eating. Ooh! Now, once video's over, I'll go back to watch what I missed with you explaining. Tomorrow, Mike should be delivered, so I'll hook it up on Sunday. Because going to New York tomorrow for Comic-Con. Oh, cool. Never been to a Comic-Con, but they'd be a blast. I'm going to leave the buy side on here just in case. This gives us something. I don't know why that was chasing the stop loss up so fast. Let me check my... Not sure why that chased the stop loss up so quickly. We'll wait and see. Okay, I'll turn that off because that's clearly going down still. All right, Euro forming a fair value gap. 1717. There's 1717. That's a little hint for you. 1717. For me, 1717, which is like 1017. That's that 15-minute wick type thing. Wait for it to settle out. So there's your 10 o'clock. There's your gap, fill. Then there's your... If you took your first, if you waited after that and took the first one, that would be your first one there, and you'd be wrong. So I wait for it to settle out for 1012. There's your 1012 right there. So you wait for the fair value up to form after that, which is right here, and that's the one I got in on. That's the explanation. You just need to mark the time on here, 68 minutes in. This was the reason I set this up. It was the, oh, what the hell went in there? Gold? Holy shit, my gold's so, okay, let me turn those off. I'm in on a gold trade now. And it took those out. I wonder why it keeps chasing it up so fast. Same bot I always use. Oh, this is gold, that's why. The spread is ridiculous in gold. Close trades. Let's burn all these. Closed. Engine only. Let's take this one out of here. Gold's not a good place to put my bot. This is the next price leg down. Holy crap. All right. This could be a big deep run now. It's a lot of fun. We don't dress up, but it's fun to see how much time and effort people... Oh, I know. I bet you there's people that do some amazing, amazing costumes there. I'm not a buyer of anything either. Just go for the day. It's fun. I bet you it would be an absolute hoot. I love to see people so enthusiastic about their passions in life. And Comic-Con's a great place to find those people that are just like so obsessed with a character. And they're harmless. I think it's amazing. I love people's passions for some things. It's excellent. All right, so where are we right now? Okay, look for right here. Euro. Now, I'm going to stick my little bot on here and see what happens. Got to make sure I put in my little parameters here. And we're definitely not going to go with, we're going to go with like that. So let's go, I don't want to go 5, I want to go 1. Same kind of setup I just called here. I want my stop loss sitting down in here. Not a very big, this is my reason for, if I start to eat through this, I'm out right away too. Here's my rule, and I'm not following it with this one. I just saw a break in market structure with a small fair value gap. I'm coming back to take that. Now here's why this, I don't have a lot of faith in this one, or a lot of strength in this, is the fair value gap. If you watch carefully, the fair value gap occurs below the swing. When the fair value occurs above the swing, then to me those are a lot more stronger. When they're below the swing like this, we could just get this messy side-to-side action going on here. So I've got low leverage, and I'm only risking 46 bucks or some ridiculous number like that. So it's not a huge amount, but I want you to see the kind of why this is not a super strong buy for me. I'm just taking it for a break above a market structure, small little break-in structure here outside of this consolidation, a return back into 50% and looking for a push up. Now I'm stuck on this guy right here. I need this guy to start breaking through. Yeah, I need to start running right through the threshold of this candle. Now I don't want to see this come back and revisit this, so I'm going to move this back up here. And because there's a spread, geez, come on, move. I want to see that order block get eaten through, because now I'm between these two. If I'm looking at quick PD array to PD array, I don't want to see that drop any lower than here now. I'll put that there. That's it. That's my PD array matrix. I'm looking for PD array to PD array now, here to here. So this one can come up into the threshold of this if it wants. I'd rather see it blast right through it. Thank you. Now it can come back to here, which is my entry, but I don't want to see it lose the threshold of that candle there. I want to see it, if it hits the rejection block, it can just turn around, come right back down, and now I've only got a $18 stop loss. And you might say, well, you're chasing your stop loss up too fast. No, I'm following a PD array that I want to see. This thing has provided a level of support. It shouldn't have to come back down here. And if it does, then I don't want it. It's not the strength I'm looking for. So I'll take a small loss and be fine with that. If it runs down into here and then takes off, again, it's not what I was looking for, so I don't care. There's the return to what I was just mentioning. I want to see it come back to there. It did. Now I want to see it take off from here, start moving up. If it doesn't and eats through it, then I know my line in my sand is right there, and I'm out. Does that make sense, what I've just explained? Hopefully it does. There you go. So I called that here. I called that here the threshold. I said it could come back to here. and it did. And then I want to see it break above, and it did. So it's following the PD arrays that I'm looking for. Now that it broke the high, I don't want to see it come back to here again. Even though it could come back to the bottom here, I don't want to see that. So now I got a $2 risk here. And now you also take out 10% because we broke our high. Oh, sorry, I can feed the wolf. Boo! So I take that off, so now it doesn't cost me anything. So it's a zero stress trade, even though I'm going to take a little loss if it comes back to me. The 10% I took off there pays for my whatever loss I get here. Does that make sense? Yes, but there's much longer delay than usual. Oh, sorry about that, bud. So now that we broke this high and this high, the midpoint of that whole thing is what it could come back to. And I don't want to see that. I want to see it start, breaking up, start going to the upside. And I got my bull side of my bot on, so are we getting a retracement in the euro? Look at that. It's like I told it what to do, hey? But when you watch these things go from array to array, you can actually, if it's functioning the way you want it to, the algorithm is supposed to, and it's not too much influenced by news events and that kind of stuff, where you get some volatility injected in there, or people manually intervening, then the algo should run to these PD arrays that I just pointed out. Take your fib tool. Look where you return to, 50%. Now we're well above this order block, so we're returning into the body of it here. I don't want to see the threshold give way here. So you can take another portion out here. Oh, sorry, I keep thinking wolf. Oh, take some out. So now it doesn't cost me anything. And you make a little bit. So my first 10% paid for my trade. Next 10% is in my pocket. Back to the PD array. Now you want to see it run through here. So it's already ran through this order block here. Look at this guy here. We want to see, is this going to provide a level of ceiling for us? So as soon as it breaks this high here, I'll take another 10% out there. As soon as it breaks that high, I'll move my stop loss to here, because now there should be no reason for it to continue down here if it's got some intentions of going higher. Well, we have a third person in watching us today. Well, welcome, whoever you are. Welcome, welcome. There's the threshold. If it comes down now, it's the top of that little fair value gap there. I'm sitting just below it. This is the inversion fair value gap now. You can come dip into it, midpoint. Now you want to see it retract away from it. If it doesn't, then that was it. That was the high. And I'm out. So it didn't cost anything for that trade. We made a piece. Made a piece again. And yeah, what was that? $4. $4 and $17. That's not to brag or anything about that. That was just to show you I didn't have a lot of confidence with this one, but again, it's that whole point was this fair value gap here. We did get a break in structure here, and we're looking for quick snipes in and out, right? If you're not looking to make $5 or $10 because you put a full lot leverage on there, then the point of this whole thing wasn't about making money. It was about showing you how PD arrays work. I don't have a lot of faith in these ones where fair value gaps occur below the swing. I like to see this fair value gaps, like a big one up here, fair value gap, come back in, tag it, leave a big chunk of it open, or you get double fair value gaps, and then a return to the first one, leave the second one open, and off you go. These ones don't have as much strength on them, I feel. Again, Michael has never explained it this way, but this is just kind of my own observation to look for these ones. If it occurs below, then you got to take it right for a fill, and then there's no breakaway gap. Then you wait. Your stop loss is like right at this threshold here, because if you lose that, for me, if a body breaks through that, I'm out before it even comes back to my stop loss. And if it breaks the high, you start scaling out right away. You take out 10%, and now that's obviously, if you entered in right there, that's only 4 pips. Some people say, that's not, I'm not trading for 4 pips, putting risk on for 4 pips. All right, well then don't trade it for 4 pips. That's fine by me. So that as soon as you break that high, move my stop loss up to here now, because it should not come back to here again. If it does, then I'm out. It goes above your high again, take another portion out. See how this came back all the way into body of the candle? This body had never been hit, right? Now it's been hit. Pulls away, we're into the threshold of this one. We wick through it, but we've hit the threshold of that one. So now you're really between here and here. Those two candles now. Now you don't want to see this visit here again. If it does, the threshold is the, watch the threshold there. See it stop on it and then pop and then go through. Lower time frame, that just literally the 1 second chart would have went whip up, grab what it has to, and continue down. See, here's a good example of why that is not a super strong one. Now later on you're going to see an example of a much better example of this breakaway, and you'll see why I favor the long one over a short one, a one that occurs before the swing. So tiny little gap. Yeah. Does that make sense though, Kevin, what I explained here with this one? That's just my own observation, but you'll see. Let me give you an example of what I mean. Oh, there we go. Here's a good example of what I mean. So here's your consolidation, right? We have a sudden breakout. Now this consolidation, there's your break in structure. So here is your fair value gap above the breakaway versus below the breakaway, right? So there's the break in structure. Yeah, we broke with a body above it. That's fine. Fair value gap forms. You come back, tag it, start reaching for the first one, because ones that look more favorable are ones like this. We have a fair value gap that occurs above the break. You enter in on the fair value gap. You want a piece of it to stay open. It does come back and eventually fills it perfectly here. It just tags the old high perfectly, which is another entry that Michael teaches in a consolidation. It usually comes back to tag the top of it or come down to 50% of it. The top is alignment with a wick into that. You don't want to see that break through there with a body. So your stop loss would be sitting just below your fair value gap candle that forms the low of the fair value gap. So, and you scaled out a portion above here, you scaled out a portion here and here if you get them. Or if you're coming up this way, you scale out a portion and a portion. If it comes all the way back down and it takes you out, then you wait for your next breakout. Here's your next break above market structure, fair value gap. You have 1, 2, 3. You want this one to stay open. It doesn't. It comes all the way back, takes you out, and then takes off. So this one would actually have been a full loss, unless you put your stop loss down here. So it's not always 100%. Not always 100%. Your trading view isn't updating. Oh yeah, do you have like a totally different price than me in trading view? Usually trading view's price is markedly different from an MT5 platform, because you can't get MT5 on trading view, can you? I think they're just like separate. One's Pine script. They're totally different servers, I think. All right. Or whoever our mystery guest is, welcome. We've got a third person in our watching us. All right, so now let's look for something. I just want to show you an example. We'll do some paper trading now. Here's a good example right here of another breaker. See these two? We have a low, a high, and a lower low. Last up close candles before a run below an old low form a breaker. Now this breaker, if you have a breaker inside of a fair value gap, it's a typical load the boat scenario and cash in big time. So here's the run. This is the hourly. So, and again, this is all fractal. So this occurs on any time frame whatsoever, because it's algorithmic, people. It's algorithmic. Here's your new week opening gap. So we have multiple confluences that support price. We have a breaker, runs down, runs back up into the breaker, which is these two candles here. It's usually the last up close candle, but when there's two side by side, you take them both, divide that in half, that'll be your midpoint. Let me show you. Here to here. The bodies, you don't take the wicks, you take the bodies, and then watch. 50%. Ding, that's the threshold right there. Beautiful. Beautiful price delivery. Love it, love it, love it. Come on, get out of there. So that is 50%. It's inside the thing there. Load the boat. It's also the top of the new week opening gap. So when you see confluences that say, look, top of the new week opening gap, we have a breaker inside of a fair value gap. We have a load the boat scenario, 50%. You want a piece to stay open. That'll be your breakaway gap. And then whammo, we unloaded. So as soon as that comes here, you unload. For me, I had unload a little portion here, a little portion here, a little portion of these equal lows down in here. So you would have got that 30% of your trade off right there. Oh, sorry, right. No, you would not have got them off there because they've already been taken. So that comes back up. Then you look for 30% of your trade, 10% of your trade off here. So you would have gone down with a gap down here, taking 10% off, comes back, fills, and you're still on. You still got 90% of your trade is still in here. My next place is right here. My eye always goes here to the rejection block. Rejection block almost always, when you're through this threshold of that down close candle, once you get through that, and we've got a body that's now running underneath this rejection block here, I go, rejection block, underneath this inversion fair value gap now, because we've gone up through it, it becomes inversion, we've come down through it, now it provides us some level of support. And This is the first area I like to look for, because sometimes it'll just come down, hit the rejection block, and then turn around and leave and go right back up. Here's an example. Watch. Doo-doo-doo-doo-doo. It comes back up. What does it hit? Rejection block. It does not take out the low or the high, and then continues back down, all the way back down here. That's why I always, always, always take a piece off at the rejection block, because that may be the highest you'll ever get. Just so you know. Sorry, I missed a couple of your things here. Yeah, for some reason with TradingView, I tried to match the broker with Think Markets to get a bunch of choices, but it stopped updating at 10:32. I don't know why. The broker I was using with the TradingView was having an issue. Change brokers, now charts are updating correctly. Good. Excuse me. So now what we're looking for is rejection block. So I'm going to put a little, if you're paper trading that, I turn all this off here now because I don't know what the hell my bot's going to be doing. I suppose I could put the what are we looking at? 849. I could turn that on for a sell for the objective here. No. I'm not going to push my luck. That's where I'm sitting for. That's my objective anyway for the day. If I was looking at this as your optimum trade entry with your reversal. Here's your, that's the low to the high. 62% retracement. There's 50. 62% also lines up with 50% of that. 62 and 50 plus the weekly plus the fair value gap plus the breaker inside the fair value gap. Way too many confluences not to pile in on that sucker, and I didn't see it, so I didn't take it. But that would have been a major pile in right there, and that's where you're aiming for. That would have been a almost perfect entry. That's just a little tiny mohawk above. All the way down to here, 78 pips for the day. Haul on that. And if you load the boat, holy, this could be a new price leg down. So we may even be driving through all of these equal. Let me revise my statement. This is the first objective. Then you're aiming for this and this down here. They're not leaving this untouched. My guess is they're driving for this right now. So that would have been the freaking entry of the day right there. Had we seen that a few hours ago, but that would have been before I even woke up. So I wouldn't have got in on it anyway. That's okay. The broker, oh yeah, okay. Okay, I'm all caught up there. So watch here. This has been reinforcing our downward trend for the day. We're calling on pound and euro. Is euro doing the same thing? Yes, euro's doing the same thing. On the daily, we said it would come down some more. So call the right direction. Now, here's the precision on the day. Even though we call the right direction, the best entry would have been right there. Yeah, it's easy to say that, but I explained why. Multiple confluences that said that was the perfect place to enter today. Go back and review the explanation if you're new to this channel, or you wanted to see exactly how that setup would have occurred. I explained it in detail a little bit ago, a few minutes ago. And watch for this objective here, and then further down. If this continues, just so I know, I've got this in my video diary now. Once that objective has been hit and this objective has been hit, that's my next objective right there. So I'm going to put the prices on here just so I've got video confirmation of each one of my predictions. There's your free signals. Sorry I couldn't give you that soon enough, but and this isn't a reason to jump in now, because again, like I told you, that may be the downside objective right there. And the only one. It may hit that, turn around and come back up. I doubt it, not with all this sitting down here. And a pool of BISI sitting right in here. Now, where does this BISI line up? Does this, let's just take this for example. When you look at price legs, if that's my downside, next price leg down, and I'm looking for this. Now you look for confluences that support this as the next price leg down. So take this guy here, and we draw it across. Oh, looky, looky. Oops. I'm going to go over here and make sure this is an even, just so you don't think I'm form-fitting it. Look at that, right to the top of this guy right here. Would that be logical? Little tiny imbalance, a little BISI right there between here. So just so you know, it says the low is 20.81.7. The high here is 20.78.1. So there's a little tiny BISI right in here, and look at that. That comes back to exactly on the top of there if that is the next price leg down. It's rocket science, people. It's all randomness that I unfortunately line up with complete randomness of the market. There's a meeting, a board meeting that's going to happen in that time frame. That's everybody's going to be changing the market right there if that's the price leg down. So again, calling it hours before it happens or minutes before it happens. Key levels. And if you're scaling out, you scale out, move your stop loss to a point where you're going to make money and turn this into a stress-free trade. And don't worry about the end result of your prices. Just look for the logical levels, and do they get hit? Does the algorithm function as it should? Is it functioning in a normal capacity? Is it hitting the PD arrays I was talking about on the 1 minute? Is it doing it on the hourly? Is it doing it on the daily, weekly, monthly? Once you start to figure this out on the 1 minute, and you start to see how price is hitting these specific arrays and leaving, then you start to realize, hey, this happens on all these time frames. All of them. It's all fractal. And I don't care how the algorithm does that. I don't care. All I know is it does what it does. It's simple. Some people need to know the whys of everything. Good for you. Spend your time doing that. The end result is you'll still be looking at the same things I'll be looking at with so much more knowledge, so much more skill set than I've got. But you'll still be looking for the same PD arrays I'm looking for. People have to run what's referred to as meta programs. They need so many different levels of convincing that it's actually going to work. Some people need to be told once and say, yep, that makes sense to me. That'll be my gospel. And some people need to be told 100 times, and some people can never be proven. No matter how many times you show them, they'll just never convinced that that's the way it goes. There's just no way you'll convince them. And some people need proof every single time. So That's what makes us a delicious world of people, different experiences. And it will right after the lunch, most likely. Change brokers, and it will right after lunch. What are we looking at? 9. So we're looking at 11 o'clock. Now, if this takes out this low at lunchtime, look for these levels. I'm going to leave them on there, and tomorrow, when we come back, we're going to see if they hit. So, what's the upside, you say? Okay, how far could it retrace? Look for this hourly inversion right here. If you lose the hourly inversion, then we're on top of this fair value gap daily again. Then that is not what I expect to see coming down here. I want to see perhaps you'd be allowed to come back to midpoint of that imbalance. This order block. Just to the edge of it. So don't forget that order block also lines up with its low, open, and threshold is in here somewhere. You'd have to take your fib tool, pull it from there to there. You'll probably find that it'll be the top of this imbalance. So you don't want to see it go past the top of the imbalance on the way back up if it retraces before running back down. If it does, then my trade would be off. This trade that you were in, my trade would be off. And those who keep these things longer will say, I leave my stop loss up here, I'm in. If you didn't scale out there and you want to keep holding all of your money for down here, bless you, good luck. Again, that's a management style. It's a manage your trade style. It doesn't change your entry, it just changes how you manage your money. Some people are more bold and brash and can reach for the stars. I've been burned so many times. I've done all the things that Michael said not to do. I did those in my years of development, and the scars that it leaves behind, he is not kidding when he tells you do not trade with live cash, especially if you don't know what you're doing. Do not trade with live cash, because it will leave indelible scars in your psyche. And I used to trade thousands of times. I remember when I first started out, I went live after 1 month, and I was trading live money, thinking I had it all figured out. And Michael didn't give us all these fancy setups that he gives now. He was building the entire mentorship, start to finish. I just saw a couple of things that he did, and I just thought they were gospel, and that was it. I was just convinced. So my tuition fees were live funds the entire time I was in there, and years afterwards I was still dropping and it wasn't until he started giving all these setups and you start to see it more clearly and you analyze it. And I've spent thousands, and I kid you not, thousands of hours in these charts. I was on night shift, and if I had a night shift and it was a quiet night, you get all your jobs done around the hall and you stare at this charts all night long. If you're doing a 12-hour night shift, boy, you get your stuff done and you just sit there and stare at these charts and analyze till it gets to the point where you saw what I was doing this morning, where it hits exactly at the spot I'm expecting, and I say now leave, and it leaves. That's craziness. That is absolute craziness. But that took thousands of hours to get to that point. Anyway, my point is many. I have many points. Be careful about how much you're putting on the line. Follow a simple set of rules, like my buddy Kevin here. He's got a set of rules he follows, and you can get a payout or get yourself a funded account really fast if you follow the rules and follow a simple setup that you're looking for. You don't have to know all the crazy shit that I've been doing here. You just have to know, look for your setup. It hits. Put your leverage, keep your leverage low, and nibble away at it. And as you nibble away at this, you will find that you'll get your funded account, and you'll be like Kevin, who's looking to get paid soon. And he's only just been doing this for a couple of months, people. That's huge. That's huge. But that right there is the one thing he holds over one thing I didn't 7 years ago, and that's discipline. He is so disciplined in his trading. And that's what gets you your success. Follow the effing rules, right? You got to follow the rules. And journal the shit out of it. This is my video journal. I do my journaling, but it's done video, and I share it with everybody. I put my things down there. If I'm wrong, I'm wrong. I just go, where did I go wrong? And I'll go back and I'll look for, that's why I didn't find that PDRA back there. Oh, okay. Good. Next time, I'm glad I found it now. Positive encouragement. Always set your neural pathways to positive. Always set neural pathways to positive. If you don't, all you do is reinforce negative behavior, negative thoughts. If you think of negative shit, that's all you get. More of the same. Your brain looks for more proof of the thing you focus on most. You focus on success, align your speech to success. I get up every morning and I stand in cold grass. I look up at the stars and I just connect with the earth, and I just free up all that negative energy and just get grounded for a moment before I come and look at the markets. Now, I won't get an opportunity to do that very well when the winter hits, but in the morning, it feels so great to stand out there on the cool grass and just have a peaceful moment. It was foggy this morning. It was cool. I'm standing in my backyard with my feet in the grass and just looking up in the in the fog, and just kind of getting grounded, getting your mindset. And you come in, you're clearer, with some coffee as well. You're a little clearer, and then when you see this kind of stuff, it's a beautiful thing. And that, again, I will reinforce anybody watching who watches this later. Don't take my word for it. Go see the man who I learned it from. Michael J Huddleston, ICT trader. Go see him. You've only got him till November. Get it from the horse's mouth, because you ain't going to get it any more accurately or any more direct than you do from him. Then when you come back, make sure you've gone through his mentorship, study the core materials, and it's free. You don't go buying it, paying for somebody else. You get it free on the internet. It's on YouTube. You don't go paying somebody else to feed you the same stuff that Michael gave you for free. So you get it for free from him, and then you come back and apply it here. We'll show you how to apply it here. I'm not selling you nothing. I'm just showing you how it works. It's all free. One day I may charge for it. One day, if I get enough people together, and I may charge $5 a month and say, here you go. I'll keep giving you keep giving you my signals. I'll keep giving you the setup. And if you're already too good to do it, then you go off on your own, do your own thing, bring more people in. I don't know. Right now, I'm just enjoying the journaling, enjoying chatting with some people, hearing people's success. I can see why Michael gets so turned on by the success part. I just love hearing it. And when I heard Kevin, when I heard that you were doing that funded account so early, my goodness, I'm so excited for you. I am so excited for you. I'm just smiling here. I'm thinking, I can't believe this is so much fun. I just want to hear all the things that you're doing and how successful it's going to be for you. And this journey, I get to be part of Kevin's early journey, right, as he succeeds. If you stick around here for the next few years, Kevin, and you keep making money, man, just keep me posted. Let me know how well you're doing and how it's affected your life. And Michael would love to hear it. He loves hearing all these success stories. So to be part of that as well would be a real treat for me. And if I can help out in any way, that fills my cup. That fills my cup to overflowing. Anyway, so we're still reaching for our first objective here. We're slowing it down. That's what I've been doing. I'll be here with you as long as I don't get stuck working overtime. That's all right, buddy. One day you may sit there and go, oh, who needs this overtime? Who needs this overtime? I create my own pay now. I don't have to do overtime. It'd be great if you could just substitute your income and say, I just did a $10,000 week. I don't know about you, but $10,000, that would pay me a month. I'd be happy making that in a month. Not that I want to restrict my mind to a 10 grand only, but imagine making 10 grand in a week. Is it possible? Is it possible for making 10 grand in a week? Boom. Yeah, it's possible. A couple of little losses with the robot, but 10 grand? Yeah, it's possible. Given its demo, but if you know what you're doing, you can make 10 grand. In a week. That was not a good example of how to make 10 grand. Trust me. Trust me, that was not a good way to make 10 grand. That was just pure stubbornness. I was arm wrestling the markets, and unfortunately, or fortunately, I made it, but you don't want to reinforce shitty behavior like that. So, sorry, that's not a great way to make 10 grand, but that was more of me arm wrestling with the market, and I happen to come out on top. That doesn't necessarily mean that happens all the time. It doesn't. Is NASDAQ 100 aiming for the previous week's high? Okay, let's go to NASDAQ Tech. Is it aiming for the previous week's high? What the hell we got in here? Previous week's high. Here. Is this what you're talking about? In here? Is that what you're looking at? These old highs here? I'm just watching the video and it's taking a while to catch up to me here. This is where you're looking right here. So consolidation. There's the largest down close candle, wick. So look for that in terms of your range. Look for the range from high to low. We called this high today in NASDAQ, or yesterday we called that high. It hit it perfectly, and we've had nothing but downside to the top of the fair value gap. Came back up, downside again, and we're running through that fair value gap on the daily. We're running into a little piece from here to here, and we just popped into it this morning. We're looking for a little run into here. Now, do we find some support at that and continue pushing down? You want to see a push down into deep into this range here, which is that gap, old high. Look at the range, 62%, brings us right back into the body of that candle. So we have high, open, threshold. Those are your three levels for that. We have inversion gaps and fair value gaps on the daily all over the place here. They're overlapping to the point where it can be rather confusing. So I'm going to start eliminating some of these. But that's the one you're looking at right there, which is absolutely the top of this one here, which is inside that guy there. So that one looks good. I'm going to get this guy out of here. Now, which ones do you delete? I'm just trying to make this a little cleaner so you can see it a little easier, but keep your eyes on these areas here as well. these little imbalances. When you cut through candles, look for these imbalance areas here. Equal lows. We're going to run down one more time into this little area here. But yeah, I think your question was, this is reaching for last week's old highs. Look at that. If you pull the range from there to there, if you didn't and you just pull the range from down here to here, 62% puts you here. Look at where 50 puts us, right on top of that order block now. So 50% pulls us here. You just pull the bodies now. 50% puts us right there. 62% puts us right on the money. Okay. So old highs, it can just come down and tag the old high and leave. So always think about old highs as just like bottoms. There's no other confluences inside here other than the daily fair value gap that occurred. What is this thing going on here? That doesn't look like a daily fair value gap at all, because I'm on the daily. Let me get this thing out of here and start this one again. Alright, so we're through this one that we just formed a couple of days ago. Man, did we ever hit that nicely. This would have been literally a perfect entry to a perfect exit inside that whole daily fair value gap. That one candle hit the top and the bottom of it, in and out. Frick, man. It's easy to see it after the fact. Alright, let me move this guy out of the way here. Yeah, look for this guy right here. I just go with steps. So before you start reaching for you say, is it reaching for this? Always think about it like this, Kevin. If you have PD arrays in your way, always look at those first before you look at these. So yeah, that would be a nice logical level. 50%. Remember, we're looking at that range. We're looking for smart money to come back into a discount so they can offload it at a higher price further up. Now, if we're looking for this as a price range, like a price leg, this would be a great place for a price leg to stop and then start reaching for higher prices above these old highs here. So watch this. If I say this price leg, and we're going to use the wicks here for the price leg because I like to use those wicks. Let's say the price leg ends right there at the top. If this thing comes down, hits the top of the monthly fair value gap again, which is sitting right in, there's another daily fair value gap sitting right in there. If it hits the top of that and creates a new price leg up to the upside, watch where you think it would go. If I bring this to here, and this has been an objective for us for months now, from there to there, if that's the price leg up, look where we're reaching for. It hits perfectly off the rejection block that I was telling you about. Always pay yourself at rejection blocks. Look at that. Right at the rejection block. Bang. See that? So for me, I like to look for price legs as well. And I like to look for confluences to support. Now, this is a long-term idea that I have because we're on the daily. And this could be the end of the year. This could be May 1st, the first week of May, the run up. This could be just in the next month or so. I can't give you a time range on when that's going to happen. If this occurred here just in 1 week, this could be happening next week. Right? I don't know. All I know is that if I was going to predict long term, I'd wait for a turn off of an area that gave me support. So if we're coming back to this area here and I come on top of these gaps now and I start to get some support and I start to get through the threshold of this candle, then my eye goes for the price leg. I start looking at this stuff up here as a long-term objective to reach for. Does that make sense? And then I start to look at, why is that my long-term objective up there? Well, because now I see that there's a nice price leg that's forming here. That's how I look at my price legs. So basically next week is longs. Well, it could be. Again, we have to make sure that, does this provide support to go down? Does this provide support on the lower time frames to continue down? And does this level provide support? If it doesn't, and we start to go through the top of this fair value gap, or sorry, this consolidation here, if I hit the top of the consolidation, now I go, okay, am I going to eat? And I start to eat through it. Well, there's nothing in here on the daily that provides a level of support other than that order block, right? So I would go, all right, well, I've got there. If it comes down into, I'd say maybe come to a logical place there. Then you got that new week opening gap combination that's all occurring down in here. Do those provide support in the threshold? Like the threshold of that candle is right in the middle of those new week opening gaps, right? Does that provide a level of support? So if we did, and I go, okay, so if they came all the way down to the worst case scenario, which is the threshold was hit there, and the price leg did this and extended up, what's it reaching for? Right there, right to the edge of that new price imbalance again. Now, if I want to aim for that, now you can start to play with different levels like this, and I go, all right, I'm going to drag this up to the midpoint of that, which is right there. Is there anything down in here that would provide me a level of resistance? Oh, it's above the threshold. I'll say, all right, now let's come up to here. Let's go to the top of that order block. What does it provide me up here? Well, it brings me back to the breaker, and it fills in that price imbalance for me. Okay. Not precision, but it does. You know, there's the top of it. Let me move this out of the way a bit. Draw the line on top. See how it comes over? It fills the top of that price imbalance, but it just goes slightly above it. So not precise. Now I go to the wick, and what does that give us? Now we're getting closer. We're getting, look at this. The wick provides threshold. Look at the threshold of that candle right there. That you can't ask for more precision than that. That is the precise middle of the threshold of that breaker order block. Now, do you take one or both? There's reasons for that, taking one or both, but we won't get into those here. But that guy right there is the threshold. It is also cut through, cut through, cut through. That one as well. You don't count that one because this guy's close. He's engulfed inside this one. Don't worry about the wicks. So you take that guy. The threshold of that is also the threshold of that, which is also the top of that, which is also 50% of this range. It's also 100% of this range run from there if it retraces back. Again, we're getting way more complex than what you really need to understand. And this is a super long drawn out explanation as to your answer, saying, is it aiming for here? Wait for PD arrays to confirm a belief that it's headed here first. So we may get next week, we may Monday or Tuesday into here. If we don't get this today, Monday or Tuesday into here with a Tuesday low, and then Wednesday, Thursday start to push for the higher prices. So we may see an opening next week for a wick down. That'd be your wick down in your weekly. And then your run back up for equal highs and that price imbalance on the upside. if that was the play. We don't know yet because there's a bunch of things that have to happen in here first to give me more proof that we're going to head in that direction. I don't know. But yes, that is an area that I'm looking at right now. We've eaten through that fair value gap there. You want to see this one get eaten through now? Find some support. Keep pushing down for the top of the monthly. This is usually a good place to find some support. See how it provides some support and took off? You went through it, came back, found support, support, support. Either going up or going down. It's this level of accuracy is incredible here across the top of that monthly fair value gap. Ah yes, all lines up. It's amazing how it lines up. It's mind-boggling. And then once you get really good at it, you start to say, okay, if this was the PD array I'm reaching for and that was a price leg, you start doing what I was doing. You start to add it and say, well, if it hits this and that's a price leg, and I'm pretty sure that's a price leg, when it gets confirmation here, all of this is free. That's free money, because now I've already predicted long term what I'm aiming for based on a price leg confirmation down here of a belief. I'm going, all right, this is what I'm looking at when I see this breaking through these PD arrays here, or these little inversion gaps, or sorry, these BISIs, they start to become inversion gaps, and I go, okay, now those inversion gaps are going to be important for me later on. Once they eat through them, I've got a big area down here. If I'm pulling my range, if I'm just retracing now to get to discount of a range, and I'm looking to go long, I'm going to go long off of that 50% point right there. That gets me right up to, boom, rejection block, right on that rejection block. Beautiful. Beautiful. That's taking the 50% of that run. So, discount. That's all smart money needs to do, is come back for discount. If not, and they're just coming back to tag this old order block high here, and monthly for a run. That's how things line up algorithmically. So you just wait and see if I'm even remotely close. Again, this is a long-term prediction. You can't put a lot of faith in it, but that's how I would logically reach for specific levels, predicting longer term. So you can do short-term accuracy. This is me trying to do long-term, less accurate, because there's so many things that have to happen down here to confirm that. But that's what I'm looking for. And a very long and lengthy explanation today. And we're still reaching for our objective today. I definitely think we're going to get our first one. Euro daily, still heading down. Look for the bottom of this fair value gap. They're pretty much tagging it, or pretty close to tagging it now. Then you look for the order block. So you look for the high. Look for the open threshold. If you lose the threshold on a close, look for the rejection block. Then the wicks. And all how you break the wicks up. If you start to lose the threshold on the close, chances are we're going to run the lows here. Further down. I'm just trying to see how these price legs kind of line up. how you would typically do low to high. Low to high. Nope. I'm just trying to see how they would line up. Well, that one does. At 25.50. I have to see those on the lower time frame. How can you join the Zoom call on Monday? Well, my friend, I can give you pop in here. I'll give you my email address, and then you can send me your email address, just so you don't have to put it on here, and I don't want you to violate any people seeing your stuff, but you can type it in here, go to here, and drop me a line at that email address, and once I've got your name sent to me, you can I'll send you the link to the Skype. It'll be on Skype, and I'll send you the link, and you can just pop in and join me, and we can chat. You don't have to sit there typing away the whole time. Look at that, came back inside that little fair value gap. That became the inversion. You popped into it, and now we're pulling back out. So now you want to see this thing start to get some legs here now and start getting up into the threshold, the mean threshold of this order block here. Not a breaker, just a mean threshold. This is the breaker. We went through it. Price leg out. Yeah, look for that threshold there. I'm going to put a wick or a we're probably not going to get this obviously today, but look for that for next week as one of your earlier objectives if you're looking at Canadian dollar. Gas not doing anything. Aussie dollar continued down as expected. New Zealand dollar looking to run those lows now. That's good. Found support this morning right off the bottom of that. So as soon as we got through this one, we didn't come back into it. Let's look at this. Let's see if there was something on the lower time frames that supported price dropping below here. I'm going to put a line in here. And we want to see if this actually provided support on the lower time frames to continue down to here, and then we'll look for one off of this one here, and then I'm going to call it quits for the day right there. So hourly, we broke through. Nothing on the hourly we can see, right? 30-minute. Nothing on the 30-minute. 15-minute. Ah, we're getting closer. Breakthrough, not a return to it yet. 10 minutes. Oh, we're getting closer. Nothing. 5 minutes. There's the breakdown below market structure, fair value gap. Return into it right here. Boom. You didn't return to this here, but here's the opportunity on the 5 minute to get in. So let's see if there's anything on the 1 minute We'll go down to 4 minutes. 4 minutes is the same thing. 3 minutes, same thing. Look how much closer we're getting. 2 minutes. Look how close we're getting there. Is this the one? Or is it this one back here? I think this was the one, yeah. 1 minute. So there was not an opportunity, even down to the 1 minute, to get in that trade. That is the one I'm looking at, right? Make sure I got the right one. 59, yeah. So the closest you could have got was the 5 minute. Right there. So as soon as you see this big bolt down outside of this consolidation, you see a break in structure. So we have a big break, a bold breakdown, right? We have a fair value gap that forms in there. There's your entry right there. Boom. You don't get quite, if you waited for the return to this, you wouldn't have got it. But if you did the breakout, fair value gap, return in here, you put entry 1, entry 2, which would have been the midpoint, entry 3 here, stop loss sits above that. If you're wrong, you're wrong. You got a small loss. If you're right, you just capitalize on a huge run down. Right? So you really have to be patient enough and follow the rules. Patient enough to wait for a breakout. If you see this stuff going on constantly, you go, ugh, I'm waiting. I was like, woof. All right, what does that happen? That was happening at 15:30, so that's like 5:30 in the morning. Breakout, come back in, hit it. Stop loss is here. At the moment we break this low right here, stop loss moves to break even. So as soon as you get down here, you tag it. Great. Stop loss moves here. Zero stress trade now. You take 10% off there, and you start to feather it down as you go down. And now what I would wait for here, a rule, a simple rule for you to say to yourself, as soon as I start to get a fair value gap in the opposite direction, I get out. So down still, down still, down still. Here's your up one. You get out there. So from there, even though you miss a big chunk of it, it's a simple rule for you got in there and you got out right there. That's 27 pips. Just a rule I like to use sometimes. If this hadn't formed here, you'd still be in, still be in, still be in. You may be out. But watch, see how when you get these reversals, if you did keep the wick in there on the way down, break up, so you're out of there. So watch when it makes a return, when it starts to go in the opposite direction. See, they're all mostly, you got little ones here like that. But when you see a significant reversal, usually another way you could look at it is if you see an up candle that breaks a swing point, then you can get out. So if you stayed in it like this all the way down, there's a fair value gap, didn't break that high, keep in. Didn't break a high, you stay in. This one breaks the high right here, so you could get out there, right? That's 53 pips. Again, it's just an example. The news event sunk it, yeah. Let me send this to you right now as a link. Start call. I'm gonna ring group. Breakfast Club. Copy a link to clipboard. Let me close that out. And get on my email. Just going to get to my email here and I'll send that to you right now. There you are. Paste. Send. There you go, my friend. It's done. Just double check your email now. You should have the link in there. Just let me know if you managed to, if that did turn up. And I'll start the call. You can just pop in. You don't have to have a mic on. Just pop in and see if you can, if the link works fine. Yeah, just double click it and see if it brings you in. Stuff should be delivered tomorrow and I'll set it all up Sunday. Yep. There you are. Perfect. I see you right there, my friend. Excellent. Excellent. I will close that out then. So just hit that link and you're in. I'm going to close that out. Excellent. Welcome. And I'll close that out. Good. So now we'll see you rocking it on Monday. With that, we will just do a quick review on what we've got here. We're still aiming for our first objective on GBP. So look for the close for us to hopefully hit that rejection. If we hit the rejection block before the end of the day and then pull back into the range, that's good too. But look for that as an example of reaching for these lower time frame objectives late on the day on Friday may not be the best thing. You may only get the rejection block and then you get it on Monday or Tuesday next week. You may not get this on today, just so you know that. If that's where your run is, take a big chunk off there, depending on where we are in the day when you finally get it. Take a chunk off there. We may have a late day push through this, but that's okay too. Make sure you bring your stop loss into at least the top of that price imbalance, or whatever way you manage your trades. Don't let me tell you what to do. It looks like the bottom has been hit on the fair value gap daily here. That candle's low is 49.56. This candle's high is 49.36. So we've got 20 more cents to go, or 20 more pipettes to go before we hit that. And CAD, we're finding some support here. You want to see this block of fair value gaps keep support and push up. If they don't, if it rocks back into here, fills this thing up, then we're pretty much between this order block here and this one here. No, this one here. There and there. So you're just going to be stuck until we run out of PD arrays on the lower time frames and we start to extend our range again. Natural gas still sitting on top of the weekly fair value gap. Inversion now. I like it. Stay up there. Pop up. That's the conclusion we talked about at the beginning of our day. We wanted to see this one to end up as a small candle. Then the next one will open up, run down, tag the edge of it, and then leave the rest of it for the week, and then we're going to see a further upside. So I want to see that whole thing stay open from the bottom of the inversion gap on gas to the top of the next inversion gap, which is right here. So I want to see all that stay open and then take off. So next week, tag here with a wick, and I want to see another big bold week of that running back up. Australian dollar running for its lows. Look for the lows to get taken out today, or the equal lows, triple lows to happen. Pull back into the range a little bit more on Friday, and then this big mitigation here. We may see price run back up into this next week for that whole consolidation thing. We may see it hit this, run all the way back up into this order block again, and then just start bouncing around, eating up PD arrays before it finally runs these lows. Or it could run their lows tomorrow, next week, or today. How's that for a very in-depth? What's the Australian dollar going to do? I don't know. We're in an extreme discount inside this range right here. Big discount. Are we going to sweep the lows and then pull back into the range again for premium? Look for a premium price. Look for PD arrays that support that premium price to go shorter, because overall it still looks kind of bearish. Then wait for December. December in Aussie dollar and New Zealand dollar. So daily New Zealand dollar looks like it's finally going to give up the ghost here and start to give up its lows. This little run here, I was expecting that little run. If this was going to be full-on bullish now, you'd want that to keep running up through these order blocks and these SIBIs that now become inversion. Now we get a body above that. You want to see it stay on top of that and keep going if it was bullish. It didn't. It actually gapped down, went through, and then gave up the ghost and fell right back in through all this stuff. So that to me is very bearish, not bullish at all anymore. So that, I think this gap up caught people offline. They all thought, oh, we're going to go long on this, and now it's come back and put all this lot under pressure again. Equal lows, all that stuff's under pressure now. It's finally going to run those out. S&P 500, last little bit of this one. Make this a little bigger so I can see what's going on there. So we're down inside. Let me get that out of there. We're inside this fair value gap here, there to there, daily. Right? That high to that low, we're inside that one. So right now we're just we'll probably end up inside this fair value gap for the rest of the day. Unless we get a wick that pulls back and you sit on top of it on the lower time frames. And then you say, all right, now is that your typical bull flag type thing, and we're going to start moving up. Wasn't this the one that we were looking at doing the price leg on? Or was it a different one? No, different one. Man, did that ever hit perfectly off there today? Shitballs. We would have stayed in that. Running for here. This is my thing I'm working on now, is trying to see how long I can stay in a trade. I can hit these little small PD arrays. I want to see that price. I'm going to go back. I will analyze this on how I could have stayed in that all day, having picked that as my high for the day. And I'm going to be breaking that down for myself to figure out how I could have stayed in that longer, what are my rules that would have pulled me out, and where can I be a little more lax, or how can I develop new rules around staying in this longer. Gold. What's gold doing? Daily. You didn't realize you had Zoom. No, it's not Zoom. That's Skype. But if you've got Zoom, that's good too. I can do Zoom as well, but that's Skype. Sometimes you don't have it. It just, as soon as you click that link, it automatically opens it up in the browser, so you don't have to actually download it all. But if you have downloaded it, that's even better still. That's what I need to do. Stay in long, or at least scale out. Yeah. Well, I think we're getting really good at scaling out of a trade. Now we got to try and figure out how the hell to stay in it a little longer. Oh, see that I didn't even use those. Skype, Zoom, whichever. I have no reason to use them. But you do now, my friend. You do now. So now we're through this one. Through this one, do we get support here and start pushing through the rest of the top of the fair value gap monthly? On top of it, start running up higher prices now for gold. Now we've ran right through all those fair value gaps in price, and we're still pushing up to the upside. So here's a level of, do we have an order block forming here next week on Tuesday, and then further upside push for all this. There's a ton of liquidity sitting up here. There's Candyland up there at $2,000. And last but not least, look at that. It's come back in and finally filled that little tiny fair value gap we put in there earlier. It's tagging it right there now at the bottom. Now, does it hit that stop there for the week, or does it actually pull back with a little wick and end the week off right there? Um, 25, 50. We're still looking for this. Oh no, this was the NASDAQ. We were looking at this one. This was the one that was going to push up for the higher price. Okay. So we'll see what happens. We want to see that push, continue pushing through then, just to see if my prediction kind of runs through for the rest of the week. Do you think it would be beneficial to focus on a pair on a certain day each? Say Euro and GBP on Monday, on Tuesday gold, Wednesday something else, instead of hopping around? Yeah, the hopping around thing, well, I can see how it would drive people nuts. We can stay if you yeah, you can't pick a certain day, because certain days of the week are high points, like Tuesday, Wednesday. A high or a low will form on Tuesday or Wednesday, and that'll occur across all the markets. So they're all potentially viable on those days. So you can't just say, well, we're going to trade these guys on a Monday and then these guys on a Tuesday. Or all the markets are going to respond with a high or a low on a Monday or Tuesday, or sorry, Tuesday or Wednesday, and the reversals usually occur on Thursdays. Like you look at yesterday, that was the reversal day. There you go, up, reversal Thursday, Friday, right? So usually you'll see Thursdays are reversal days, and plus I have a whole system I use that Michael hasn't taught, which is on candle counting. I have specific candle counts that I look at for specific turning points. So I will try to limit my hopping around. My advice to you is stay on the two that you like it the most, and keep watching those. And if you see something, I'll come back and double check it to confirm that that's a good entry for you. I kind of hop around looking for an optimum entry. If I see something on a Monday, Tuesday, and I say, okay, well, I think that Euro or GBP is our play for the day, then we'll stay on that and try not to jump around. And I like to try and give people a full scope, because what you like here, somebody else likes this. So I like to try and give everybody a full analysis of everything that I've got on my charts, and then look for the ideal one for a setup. So I'll try and limit my bouncing around, but you may have to stay on your two while I bounce around on my ones for a while. And if you see something that's setting up on yours, then I'll come back and confirm it. Yeah, I wasn't sure for you to stop hopping. I wasn't saying for you to stop hopping. I was saying more for me. But for next week would be better since the Skype call. Yeah. Yeah, if I'm hopping around, if I'm pointing out a point that you're seeing on one chart, it's exactly the same kind of setups that are occurring on other charts. I know some currencies have a certain flavor when you trade them. Oil has a certain feel for itself, and obviously whatever you put on leverage on euro and put that on oil will take you up 200 pips in no time at all, where this would take you days or weeks to get 200 pips out of that. Oil can do it really fast, so you can get beat up pretty quick in that if you're not really careful about how to manage it. But I will try to keep that under a little more control, so we find our one that we want and stick with it. Yeah, next week would be good. Once you get your Skype working, then you can kind of just say, hey, look, I'm looking over here. I can jump back there and have a look. We don't have anybody else that really pops into these things anyway, so it'll probably just be you and me most of the time. And we can pick that one, whatever one we need. All right, well, that's it for me, my friends. We are coming up for 10 o'clock, which is lunchtime, New York time. Keep an eye on the areas that we talked about, and keep your powder dry, and let's wait for next week to hit some big trades. Thanks for popping in, Kevin, and thanks for popping in on the old Breakfast Club. We got you hooked up there. As soon as you get your mic running, we'll get the Breakfast Club running, so you won't have to sit there and type all the time. With that, have an awesome weekend, my friend, and I'll see you. Stay safe, and remember, there's a lot of hate out there, ladies and gentlemen. Spread the love, not the hate. Help people out. If you've made some money and you've been one of the fortunate ones to make some money in the world, share it with those less fortunate. Pay it forward. It'll give you more joy than hoarding it. With that, I wish you all the best, and we'll see you again on Monday. Take care, guys.